Button. All right. Good afternoon, Ottawa. Welcome back to the Market Beat, where we update you on the current mortgages, rates, and market reports. I'm joined with the one and only Erica Vincelli with the Mortgage Advisors. Thank you so much for being here and everyone tuning in.
Happy New Year.
2020.
And like a week and a half, almost halfway through January already.
Right? I mean, and it's funny. I was just talking to somebody about that, and they're like, "Hey, isn't it like the 11th or the 12th already? Like, didn't we just celebrate New Year's? That's how fast 2022 is starting." And I guess it's a sign of a fast year. I don't know, maybe a good, productive year for most people. Let's hope that. Obviously, did you have a good, happy New Year's, Erica?
I did. I had a wonderful New Year's. I have nothing to complain about ever. I had a wonderful 2021 thanks to all my clients, my partner, the mortgage advisors. I have great things to say about last year, and I'm really excited for this year. I think it'll be great. I hope
Yeah,
everyone else did too.
Yeah, and you know, I think 2021 caught us a little bit by surprise in terms of the mortgage world, the real estate world. Lots was happening. It was a fast market. It was aggressive, but nonetheless, you know, people were able to get mortgages and get homes, and they're now sitting on equity that's growing, right? And we talk about this all the time. And I recently did a market update for 2021. We saw 24% appreciation for 2021. It's a new record, and
Wow.
amazing. Congratulations to all the people that were able to secure a home. For the ones that didn't, we are in a new market in a new year. There are option strategies. Talk to Erica. She's going to give you awesome packages and talk to you about what you need to know. Obviously, first-time home buyers are still a big category, and we are here to assist you with that. Now, we got a cool topic, and that is mortgage checkup, and we're going to talk a little bit about interest rates and kind of what's happening. And speaking of interest rates, Erica, what are the current rates, and what do we need to know?
There hasn't been much change in the interest rate. Some lenders have, increased their high ratio by a little bit, but we're still looking under, like strongly under 3, even under 2.5 for fixed rates. We still have those really great discounts for the variable rate mortgage. So prime minus 100. It's really important to know what is it that you have right now and what can we do to make it better for next year, which is part of what we talk about with a mortgage checkup. The rates, as we know, there's the talk about rates going up. Really what's going on is that there's been not a lot of movement yet. It's speculation. They have to go up. There's nowhere to go but up at this point. I mean, they could obviously go down and make a lot of people happy, but we need them to go back up. It's just part of the way mortgages and interest in our economy works. But there hasn't been any really aggressive talk of when, right? A lot of people talking Q1, Q2, Q3, Q4. I'm like, great, somebody's guess. There's a lot of things happening and changing all the time. I mean, COVID's changed yet again. The variant's new. The kids are going back to school. They're not going back to school. Now they're going back to school. Now we have trucking that's being affected. So, what the conversation was 3 months ago, 2 months ago, 1 month ago, it might change. So all I want to say is just prepared. Have the conversations with your professionals and know where you're at, and if there's something you can do to make changes to save money, because that's really what we're here for, is to show you ways to save money, and that's what's really important. How are these changes going to benefit you?
Nice. Very, very well said. And I think this is exactly how we can continue the conversation. And you mentioned a mortgage checkup. What is that? Why is it important? Why should we think about it now?
Yeah, well, a new year brings new opportunities, and I think it's really important for all of my clients. I do this with them every year. I reach out. Now's the time for us to take a look at your mortgage, your personal finances, your financial profile, what's changed, what's going on. So, what is a mortgage checkup? Really, all we're doing is just wanting to make sure that your mortgage is on track. Have there been any changes to your financial profile, losing a job, getting a new job, having a baby, change jobs? I think I said that. So it's really, what is going on with you, so that we understand that is the mortgage product that we put you in at that time still the best thing for you. Some people are really happy to put their head in the sand for 5 years. There is no shame in that game. I really stress, and I can't stress enough how important it is to know that what you do, as long as it makes you happy, as long as you're comfortable and confident with that choice, then do it. If you don't want to talk about your mortgage for 5 years, no problem. The fact is that I'm going to reach out to you and say, hey, you might want to make a change. But if you don't want to, that's also okay. So we're just wanting to make sure that we're always there for you, and that you have the right information and that the right product and strategy still applies to your today versus your yesterday or your tomorrow.
And that's actually, I think that's really smart, because like you said, life changes and things happen, and there's new
Fast.
updates in the mortgage world and rates and packages. So a good broker like yourself will reach out, update the clients, let them know if there's interest. You go forward. If not, you can stay where you are, and that's completely fine, right? And that includes people that are
Yeah.
on variable, on fixed, or anything else. So
Yeah.
now, what would you say the reason why you really need a mortgage checkup? What would convince
Well,
somebody to do one?
yeah, I think really, first off, you should always stay on top of your stuff, right? Like, I mean, you really just want to. You don't have to worry about it day in and day out, and that's what I'm here for, anyways. So you don't really have to do the talking. I'm going to ask you a bunch of questions and find out what's going on. Really, the really key why someone would want a mortgage checkup is when there's been a big change in their life. I've worked with people over the last couple of years. Like, first time home buyers is a big demographic. And
Yeah.
a lot of first-time homebuyers, one, outgrow their house very quickly, start having a family. So maybe it's time to have that conversation. What is on the horizon? So, and what happened in 2021 that might affect it? Some people lost their job. Some people, got new jobs. Some people branched off. What if you branched off and you're now self-employed? How does that affect you? Maybe you did some major renovations and you have some debt. So, if there's any major changes to your financial profile, we really think we would encourage to have a mortgage checkup. I mean, it's just a check-in to see what it is. I'm calling it a mortgage checkup for the sake of it, but, we're just checking in to make sure what has changed with you, and how does it affect you, and what can we do to make it better for you for the next mortgage, because I always talk about strategies, right? So each time we do a mortgage is a mortgage strategy. What is the best solution for your current today, and your current financial profile, and how can we make it better? So it's kind of the same. Just
Yeah.
making sure you're okay.
And I wanted to mention that includes people who got a raise too, because jobs change, but jobs change for the better or for the worse. If for the better, that does give you more options, right? You are now
Yeah,
higher qualified, and that could change things a little bit. So it's definitely for everybody, I think, what Erica is trying to
yeah.
say. Now,
Yeah, it's not just the problems that have happened. It's like great things that have happened. Some people had received an inheritance. So, if you have
good
extra
point.
money, maybe we can apply it to your mortgage, or maybe we can expand your real estate portfolio. And one big thing that's happened, is that a lot of appreciation has been gained, and people are wanting to get into the real estate market for investment properties. And that is a huge piece of business right now for in the mortgage industry, that they're just able to access equity and buy another property. And these are people, you just said, properties went up in value by 24%. That means those people that put 10, 20, 30% down might have a huge chunk of money sitting in their house that they can start applying to another property. So,
Yeah.
what is it that you want to do? What are your goals? I'll help you get there.
Yeah, and something that you always talk about too is when you get into income properties, that value that builds, you can take out that money again and reinvest into another one, and that's the whole point, right? Is using not your own money, but it's a little cycle that keeps going and going and going, and all of a sudden, boom, you got 2, 3, 4, 5 different properties, and all this equity and all this income coming in. It's a great thing to think about for investing.
For
Now,
sure.
should somebody be interested in a mortgage checkup? What documents are required? What do you need from people?
We would really want to make sure we have the information from your mortgage statement. Your mortgage statement's probably going to come out either in the portal from your online, from your mortgage lender. The banks have the online, the apps, and they all have portals now. So it's either going to come to you through snail mail, or it's going to come through the app
There you
or
go.
through the portal. So just check and see where you get, your mortgage statement. And so the information there is going to be the more important stuff. At that point, if we are doing a new mortgage, all the same information is going to be needed: job information, income information, credit. But we don't need to go that far. We just want to say, where's your mortgage at? For example, people that have variable rate mortgages right now, anyone that has a lower variable rate, or sorry, I should say it this way, a lower discount, anything from prime -1 to prime -7, I would say, would be a good opportunity for us to take a look and see if there's a way that we can save money. So it doesn't actually even have to be a change in your life. It could just be that, or an interest rate a little bit higher than 2.5%, because right now we could get you a little bit lower, transfer you in, and secure a lower rate for the next 5 years. So there's actually, I should have mentioned that as well. Sorry, I'm always thinking about financial profile, but really the fact is that if your interest rate isn't as low, we could look at doing something with that as well. So the first off, sorry, going back to the question, it would really just be mortgage statement, property tax statement, just to make sure we have those numbers that are accurate. And then we would want to have information about, your most recent income. But we don't need all that documentation right now. We just want to make sure that you know it. So the mortgage statement is really the key document that you want to have, or at least the knowledge of what your information is about your mortgage.
Nice. Now, based on your recommendation, how often should somebody do a mortgage checkup?
Well, I do them annually with my clients just to make sure everyone's doing well. You can do them as often as you want. I mean, if someone wants to call me every 3 months and check in with their mortgage, I'm happy to have a conversation if it makes you feel more comfortable and happy about knowing where you're at. I would say annually is probably the best one, because we can kind of cyclically see, what changes have been made. But anytime a major life change happens, then if you're welcome to reach out to me or schedule a time and we can talk about your mortgage based on what the changes to your financial profile, or what impact that has had. Also, if you think that rates, right now is actually a really good time. This is when I reach out to my clients all the time, especially being on the horizon of rates going up. Like on the cuff of rates possibly going up. Sorry, do you have a question, or is your hand up, or
No,
are you just
rates going up? Rates going up. Yeah.
Yeah. So, basically, because we're on we're in an interest rate going up landscape, that it might be a good opportunity for us to take a look and see what it is that what you have right now, and what can we do to save you some money. So now would be a really good time, but how often? I would say once a year, but whatever makes you comfortable, really.
Nice. So guys, yes, lots of talk about interest rates going up. It's just the start of 2022. We are going to keep you updated. If there's any kind of breaking news, we'll jump on really quick. We'll let you know what's happening. Still a great time to look at what's currently available. And something that Eric has always taught me, and something that I tell my clients all the time as well too, is lock in a rate. If you're happy with something on the market right now, you can hold it for up to 120 days. That's going to give you time to study the market a little bit more, see what options are out there, and then reevaluate if you have to. And if you're not happy, or whatever changes for some reason, it goes down, you can cancel that and then reapply for another one, right? So I think a lot of people forget that. They feel a lot of pressure sometimes. And that's a lot of the feedback I get from clients. It's like, oh, well, if I commit, or if I submit my application, that's it. It's this rate and I have no other options. Guys, no, you're giving, we're holding a rate for you, right? We're holding a rate for you. We're giving you an option so that when you're ready, because doesn't happen within a week or a month, right? You get into it, you get the rate, you get the real estate, all that stuff. It takes time, but once you're ready, then you make that final decision. Do you want to stick with that rate or not? And believe me, 4 months it's a great time, right? I mean, this is why they have it up to 120 days. Is that for all lenders, or is that most lenders?
Well, all lenders will hold a rate for 120 days. A pre-approval is a little bit of a different rate than an actual approval rate. So it does kind of change that conversation a little bit. But I like what you said, because I've even talked about that with clients who right now, they're unsure if they want to make a change. So I have a group of clients right now that I've said to them, listen, so these are existing homeowners, by the way. So I've said, listen, why don't we apply for a new mortgage, secure the rate, and then you can have the time to decide what you want to do. And I think you were speaking more about, a pre-approval for people that are looking at the market. I agree with that as well. Getting pre-approvals in an interest-raising market is important. But even those who already own a property, who already have a mortgage, if you are thinking about making the change, but you're just unsure, let's just secure the rate, let's secure the approval, and you have 4 months to make that decision. We don't have to close in 6 weeks. We don't have to close the mortgage or fund the mortgage right away. We can extend it. We can even extend it past that. It's just that you're subject to whatever the new rates are. So there's no harm in doing that. And if we have to cancel, we cancel. And so I have a lot of clients right now that are jumping on that because they don't want to feel the pressure to make changes now, but they know that either probation's coming off, that someone changed jobs and they have a probation, or they want to finish the renovation at their house. So there's a few things that would allow them to secure the rate now, but be able to make the change later. And then once the mortgage is complete, such as job verification, everything, and the appraisal's done, let's say, then if we need to, we can advance the date for closing. So I think it's a really good solution right now just to secure that if that is something that's going to happen. Because again, we don't know what's happening.
Yeah.
No, they are today.
No, again, and you said it very well. Lots of detail, lots of information. So yes, like we mentioned earlier, big question mark to ask, where the rates are going. We'll keep you posted. Mortgage Checkup, highly recommended. I think it makes sense. Just a friendly check-in, see what's going on. If there's anything new that you should know about where your rate was a year ago, 2 years ago, 3 years ago, or if you just started and if anything's going to change, contact your broker, call Erica. She's going to tell you what's happening. Anything else you wanted to mention?
Just happy to be back.
Happy to be back. Happy 2022. We'll keep you posted. Lots of excitement, lots of happening in the market, and we're expecting it to be another very busy, fast market. We'll keep you posted on everything.
How much inventory is out there, buddy?
0.7 months of inventory. Not too much. It's
very much.
Kind of like
good time to sell your house.
I don't have. It is a great time to sell your house right now. But again, that comes with having a plan B as well too, to where you're going to move. So again, buyers are still out. Buyers are looking. Lots of bidding wars. We'll definitely save this conversation for an upcoming podcast. But yeah, continuation and repeat of 2021, same time last year. Basically, again, low months of inventory, high demand, lots of competition. So, all right, guys, thank you so much for tuning in. Erica, thank you so much for being here. We will see you in the next one. By the way, this was episode number 80. Number 80 to start off 2022. Looking forward to it. Lots to talk about this year. Super excited. So thank you for being here. And thanks for tuning in, guys.
Bye, guys.